And it's 10 a.m. here in Lagos. Good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Thank you for joining us. Well, once a woman is empowered, it trickles down to other areas of a nation's economy. That's the position of the Managing Director of the SunTrust Bank, Mrs. Halima Buba, during the launch of the bank's new SME product, Women on Wheels. She says the initiative will bring succor and support for women in the country. Let's take a listen.
SunTrust Bank prides itself as the financial technology bank that engages in consumer, commercial, corporate and non-interest banking, with branches in Lagos, Abuja, Rivers and Akwa Ibom states. Today, the bank adds another program to its assets finance program, codenamed Women on Wheels. The program, like its name suggests, targets women in the transport sector.
I have passion for women. So this, because of my position as a woman and because I have passion for women and I need to see women develop and grow in their various fields, you know. So myself and my SME team came up with the program.
No fewer than 100 women are the first beneficiaries of the first phase of the launch in Lagos. Some of the beneficiaries say they're excited as the program comes with a lot of opportunities.
I don't even know how to say it. I'm very, very happy because they made it so easy for us. Do you understand? Like a lot of us have been trying to do this. We've been trying to get maybe another car, a better car, a new car. Some of us have been working with rented cars. You know, some of us have higher purchase, and the prices are so ridiculous. Not that we're complaining, because the people who put this money down also have to make profits. But SunTrust just made it easy.
I know so many women to go through what I've gone through. They don't have anybody to speak with. Please come out of your shell. Come out from where you are. You can still make it. Forget people will be saying you are driving up and down. Do you know how much we make daily?
We want to see how we can assist female to increase their fleet. You know, all you need for this program is just your driving license. You register with Uber or Bolt, and then we're good to go.
SunTrust Bank is promising to extend the package to the nation's capital, Abuja, and Port Harcourt, with a future plan to cover other states across the country.
That's women empowerment
Exactly.
at work. So you empower...
Women on Wheels.
Absolutely. You empower a woman, you empower the nation.
Exactly. Well, Xiaomi last week launched Redmi Note 10 series smartphones in Nigeria as the company continues to push the envelope on budget devices. The new set of smartphones are expected to further boost the brand share of the market. Sleek design, upgraded cameras, decent storage capacity are a few of the attractive features of the series. Do take a listen.
The Redmi Note 10 series are the new introduction into Xiaomi's family of smartphones. They are mid-range phones going for a competitive price. This event is to officially introduce the phones into the market.
Challenge your boundaries. Xiaomi. And that
From display battery life to the storage capacity, the series, according to the makers, are designed to deliver more value for money. The smartphone offers a 108 megapixel primary camera and a 5 megapixel telephoto macro lens to provide new experience to the user. Redmi Note 10 is available in different colors. The marketers say the beauty is in the phone.
we call it the 108 megapixel Voyagers. This is the magic of the 10. It is not just about the 10, but it is what is inside. Now we can now welcome the 10, the Redmi Note 10 itself.
It is time to unveil the smartphone. The sensational Austin J.J. Okocha, who played professional football wearing jersey number 10, is the Redmi's ambassador. He did the honors.
To be the brand ambassador for this magnificent product. I think it's like marriage made in heaven. where you are talking about innovation for everybody, I think I was dribbling for everybody too. So I must say that I'm so happy to be associated with this brand.
Packed with a lot of features for a mid-range phone, the Redmi Note series are playing big on specification to price ratio.
We have everything that it takes that customers have been waiting for. We don't just produce without listening to our fans. Fans are very key and they are the cash cow of the business. So we listen to them and we've given them exactly what they want at the very best price.
Xiaomi has firmly established itself in the smartphone business and confident that its new variants will challenge the boundaries of clarity, sensation and speed.
Well, in November last year, the National Pension Commission launched the Retirement Savings Account Transfer System. The system will enable RSA holders to transfer their accounts from one pension fund administrator to another. Now, there are about 22 pension fund administrators in Nigeria, and the question is, what would motivate contributors to switch, and where would they prefer to move to? Head Investment Management, Stanbic IBTC Pension Managers, Jide Alo joins us now. Good morning. Thank you very much for joining us, Jide.
Good morning.
Morning, Chimezi and Ladi. Thanks for having me.
Yeah, so Stanbic IBTC Pension Managers Limited, the largest pension fund administrators in Nigeria with over 3.5 trillion naira assets under management and over 1.8 million retirement savings account holders. What stands you out as a fund manager?
Thanks, Chimezi. What stood us out from the onset was our pedigree as a leading wealth management firm in Nigeria, because before the pension scheme started, we were well known for wealth management. And we backed that up with excellent service delivery to our customers over the years, leveraging top-notch technology. And with that came massive goodwill from our clients as well, as they continued to give us more referrals, leading to significant business, repeat business opportunities. And with that also, we have also focused on sustainable long performance on the funds that we manage, be it the public schemes or the approved schemes, to continue to deliver consistent returns on those funds. And all of those factors put together, I would say, are the variables driving the sustained growth of Stanbic IBTC Pension Managers of the industry.
All right, Mr. Aloha, PENCOM in November last year announced the new RSA transfer system. Tell us about this new transfer window. So that transfer window was definitely a breath of fresh air. It's something that had been ongoing for a couple of years, finally came live last year. And the objective of that was to return power back to contributors, because from the onset, contributors were locked in with whichever PFA is selected at the beginning. But with the transfer window now, contributors can now move their RSA balance from one PFA to another. And that window is open, is technology driven largely, and contributors are able to do that once in a year. So you can move to another PFA, have another feel, have an experience somewhere else, because like they say, people tend to feel the grass is greener on the other side. So when you experience it, you get a sense of whether or not you have actually been receiving you've been receiving great value where you were before.
Absolutely. So why would I, as a contributor, want to move to Stanbic IBTC or retain it as my PFA?
And that's a very, very important question. And I say that because we've seen situations where people are making uninformed decisions with respect to the movement of their RSA balance. Some are moving it because their friend is suggesting so, or because they received some half-baked information out there. Or for some people, it's just because there's a particular PFA that is giving them, whether it's birthday cake or another form of gift. But for us at Stanbic IBTC, we believe that consistency is a very, very important factor that contributors should consider with respect to their pension balance. And that's because for most people, your contribution or your pension is actually the largest pool of assets that most people own. So you shouldn't treat it like a bank account that you are just jumping around the place. You want to check out the industry and look for PFAs who can offer sustainable performance. And when I think about sustainable, I look at it both in terms of service delivery and performance of the fund. When you're looking at service delivery, you're looking at a PFA that has top-notch access, a PFA that offers convenience, a PFA that you can reach at any point in time. And at Stanbic IBTC, that's something we pride ourselves with. We have the largest reach in the nation because our service locations are all over the country. We also support that with digital platforms that enable you to access your pension and do the most basic services remotely from the comfort of your home. And then more importantly, when you look at performance as well, we've continued to deliver sustainable long-term returns on the pension. If you look at it over a long term, you would see that the funds managed by Stanbic IBTC Pension across the various buckets have actually delivered top-notch returns. So we are in the top-tier performance across the various categories. So those are some of the things that we think contributors should consider very strongly with respect to making a decision to move their pension balance.
All right, still looking at returns, what are the conditions for moving, based on return specifically?
So when you look at return, the very first thing I would like contributors to be mindful of is that pension funds are long-term investments. So don't make a decision based on 3 months return or 1 year return. I would say not even 3 years return. You want to look at return on your fund over a long period of time because, investment management is like sowing seeds. So the farmer that is sowing, maybe planting vegetables, will probably reap the harvest in a 3 months period. The person that is planting cocoa would have to wait for years to reap the reward of that investment. But when you look at it over that long term, then the value of planting cocoa should actually show in the performance of that PFA. So that's the first thing. The second thing is that compare like return with like, because there are 4 different fund types in the industry. Well, 5 if you had the informal sector as well. So you want to compare fund 1 with fund 1, compare fund 2 with fund 2, and do it over a long period of time, like I said. Another important variable to consider is to also be mindful of the nature of risk that your PFA is taking, because risk and return are opposite sides of a coin, right? If I take higher risk on the fund, then potentially I can deliver higher return. But check to be sure that that return is commensurate to the risk that is being taken. For instance, if I look at a risk, for the purpose of this discussion, let's say I take a risk scale of 1 to 10. I have one PFA that has delivered return of, say, 10% by taking risk of a scale of 2. Another PFA has delivered 15% by taking risk of 4, which is 2 times the guy that delivered 10%. So while 15% looks great, if you really dig through and you look at the risk, the underlying risk, the guy who delivered 15% should actually be delivering 20 because he's taking on more risk. And with that means that sometimes there will be a reversal of some of those things that look great. And we saw that last year. Last year, for instance, there was an instance where some PFAs were delivering 20%, 30%, 40% return in a period where the entire yield curve was in single digits. That clearly shows you that there is higher risk component that has been built into the performance of those funds. Now, if you don't understand that, you make a decision just based on that short-term development, and you may pay a huge price for it, because as we are seeing today, a lot of those returns have reversed, and returns have gone from those 20, 30, 40% to negative returns. So be sure that you are looking at the underlying risk that the portfolio manager is taking. And then the last point that is also of importance is also understand that the return on the fund is different from your return as a contributor, okay? Because the timing of inflows and outflows plays a huge role in the return ultimately. So take a look back as well and compute your own individual return over the period whilst comparing it to the total return of the fund. Those are some of the things that I think are very, very important for contributors to consider before they make a decision on whether or not to move their pension balance.
All right. Now, this development, no doubt, will foster competition. And, of course, Stanbic IBTC pension managers have always been at the top. How do you hope to stay at the top?
Without a doubt, we expect to continue to sustain the leadership of the industry. Not just to sustain it, but we are very, very convinced that the transfer window gives us opportunity even to double our market share. And we are seeing early fruits of that, because for us, we're part of the largest bank in Africa, a bank with over 155 years experience. And with that comes the ability to access global platforms to leverage the performance of the fund and also offer great services to our customers. So as we continue to push that message, we expect that we can literally double our market share in the industry just based on this opportunity that transfer window presents.
All right. According to a Pension Nigeria report, Stanbic IBTC's pension funds delivered the highest rate of on investment in February 2021. And this the company's RSA funds have yielded good returns for its customers. How is Stanbic IBTC pension managers able to achieve this?
Thank you very much, Ladi. So for us as Stanbic IBTC pension managers, we focus on sustainable long-term returns. And I'm emphasizing that message because, I mean, a lot of noise goes on in the industry. People are showcasing 1 month return, 3 months return. But for us, we look beyond the short term and focus on long term. And that's because pension funds, I mean, there are contributors who still have 20 years to work, some have 10 years to work, some have 5 years. Even those who are in retirement that are in Fund 4 are hoping that they will live long. So they are still expecting they will be alive for another 10, 15 years or more. So to that extent, we focus on long-term returns on our fund. We make investment decisions today that will yield return, not just in another 1-3 months, but over the long term. Another factor that we consider very strongly is the security and safety of the assets that we manage. At us, or at Stanbic IBTC pension managers, we consider the fact that return on capital is sometimes even more important than return on investment. And by that, I mean that there are opportunities in the market that we sometimes decide not to invest in because we are not comfortable regarding the risk element and the implication of adding that particular security to the overall risk component of our portfolio. So we look out for securities that will give us a blended return while also optimizing, while a blended risk outcome, while also optimizing the return on the portfolio. And then the last thing is that we leverage global platforms for our research. We are very, very big on research. And that's because investing requires us making a forecast of the market direction down the line, whether it's 3 months, whether it's 3 years. And so to that extent, we work with global partners that gives us that barometer to be able to anticipate where the opportunities will come from. And then we do our best to position our funds to take advantage of those opportunities. And those are some of the things that help us to sustain the performance of the funds as Stanbic IBTC pension manager. All
right, Jide, a quick one before we let you go. Many workers in Nigeria are still averse to contributing to pension accounts. In fact, majority of contributors literally make those contributions unwillingly because the contributions are deducted before they receive their salaries. What strategies is Stanbic IBTC pension managers putting in place to change this negative perception people have towards pension funds? And how do you ensure that people actually get their pension as at when due?
So, Chimeze, while the pension scheme may not be perfect, right, the fact is that it has made a significant improvement to the quality of life of Nigerians. For instance, at Stanbic IBTC pension managers, we have paid out over 900 billion to retirees, and that's quite significant. It wasn't so before the scheme came into being. So it's not perfect, but we continue to improve things. We also proactively lead various industry engagements that would help to improve, whether it is the process that speaks to the ability of contributors to access their benefits with convenience, even up to strengthening the investment guideline themselves.
Okay.
Those are some of the things we focus on and educating contributors too.
All right, thank you very much, Jide Alo. Thank you for speaking to us this morning. We do appreciate your time. Have a blessed day. Head Investment Management, Stanbic IBTC Pension Managers. We'll take a break. When we come back. Commodities Market Update is next.
Welcome back. Oil prices edge higher this morning on tensions in the Middle East after the Yemen-based Houthi movement said it fired missiles on Saudi oil sites and unexpected drawdown in crude oil inventory in the United States. Still, crude prices have remained range-bound in the past 3 weeks as growing expectations of surging economic activity in the U.S. and China are balanced by the slow rate of vaccinations in Europe and anticipation of additional supply of oil from Iran in the coming months. Brent crude oil futures was up 9 cents at $63.37 a barrel, while U.S. crude oil futures gained 11 cents to $59.81 a barrel, supporting prices. Yemen's Iran-aligned Houthi movement said on Monday it had fired 17 drones and 2 ballistic missiles at targets in Saudi Arabia, including Saudi Aramco facilities in Jubail and Jeddah. Desola Sumoni, one of the research analysts with Financial Derivatives Company, joins us now to give us an update. Hello, Desola. Great to have you.
Thank you. Great to have you on the show. Thank you for having me on the show.
Yeah, that's fine. Well, global oil prices are up about 1.41% to about $63.84 a barrel on stronger near-term demand outlook and tension in the Middle East. What's your outlook for Brent price in the short to medium term and the implications for Nigeria?
Okay, so the near-term outlook for oil will be driven by a host of factors. You mentioned most of them already. We are seeing one stronger stronger economic growth outlook in the United States, driven by trillions and trillions of stimulus, ultra loose monetary policy, quantitative easing, and vaccine rollout at pace in the United States. I think about 22% of the adult population in the United States have been vaccinated. We're also seeing a weaker US dollar, which is making the dollar-denominated commodity relatively cheap for holders of foreign currencies, which is also increasing demand. And like you said earlier, we are seeing we saw some attacks on oil infrastructure in Saudi Arabia, which is also supporting prices. But on the downside, we are seeing factors such as rising coronavirus cases in India and in Europe. Also, we are seeing a low rollout of vaccination in Europe. We are expecting some Iranian oil to come on stream in the near term as the US-Iran tensions de-escalate. And we're also expecting about 2 million barrels of OPEC oil to come on stream in the near term. So all these factors mean that even though we see oil prices inching higher, this downside risk could keep a cap on oil prices. So we forecast that oil prices will range between $60 to $65 per barrel in the near term. But towards the summer, we are seeing oil reaching around $70 per barrel. Some analysts, particularly those at Goldman Sachs, are even more bullish. They expect oil prices to reach around $80 per barrel by the summer. Now, having said that, looking at the effect on Nigeria, I think the effect is mixed. As an oil-producing country, the effect on Nigeria is positive in the sense that we are going to have, more FAC revenue. We are going to have more exchange rates accretion, more external reserves accretion. External reserves are currently at $35 billion with import cover about 9 months. We're also going to see, more ammunition for the central bank to continue to defend the naira. Now, on the other hand, as a PMS importing country, I think it puts Nigeria in a tough position because of as oil prices are increasing in the global market, the issue of for petroleum subsidy comes into center stage, and Nigeria cannot afford it really. to continue to pay subsidy. But I think I'll leave that at that for now. Thank you.
Talking about Nigeria not being able, Nigerians not being able to afford the price of PMS, perhaps when the global oil price, goes up on the international market, we have to pay more here for petrol. But then the federal government is saying that they have to defer the removal of subsidy by 6 months there, and they are looking at spending as much as 720 billion naira just in petrol subsidy in the 6 months. That again, a lot of people will say is not healthy at all. So where do we go from here?
I think this is the big elephant in the room. We've been here before. Last year, I think it was in March or April last year, when the federal government announced the removal of petroleum subsidy. It was with a lot of pomp and circumstance. It was a welcome development. But a key question in the economics community or among the analysts was whether this was a short-term reaction to the low oil price environment, or was a more strategic reform aimed at deregulating the downstream oil sector. Given the recent events, it would seem as if the former was the situation. I think, like you said, it's a really tricky issue, and it's also very politically sensitive. If the federal government allows the pump price of petrol to flow with market realities in the global market, then we'll see oil prices, PMS prices, reaching around 200 naira per liter, which would put the commodity out of the reach of many Nigerians, and it will probably lead to demonstration, strikes, and social unrest, as you can imagine. But on the other hand, Nigeria spends about 120 billion naira a month on PMS subsidies. For 6 months, that's 720 billion naira, and the truth is, Nigeria cannot afford to spend that much on subsidy. Just taking the 2021 appropriation bill, education budget is around 500 billion naira, while health is about 300, but we are spending around 720 billion on fuel subsidy. So the big issue is Nigeria cannot afford it. And as far as oil refineries, Nigeria keeps importing oil and our refineries do not work, we are always going to come back to this situation. Hopefully, the Dangote oil refinery will come on stream soon, which would help alleviate this issue a little bit. But until we get these other 4 refineries, government refineries, working, I think we're always going to come back to this issue when we have high oil prices.
Right. Okay, let's look at Greek commodities now. The price of wheat in the global commodities market is trending higher, driven by tighter global supply as USDA revised downward global stocks and production. What is the implication of this development, given that Nigeria is a net importer of wheat?
So, like you said, the USDA revised downwards wheat production for 2020-2021 marketing year by about 39% to about 1.07 billion metric tons. And also, we are seeing dry weather in Brazil, which is one of the major producers, and dry weather in major US producing regions, which is supporting prices. But on the other hand, we are seeing weak demand for Russian wheat, which is also dampening wheat price growth. So the effect on Nigeria, I think, is profound, given that, like you said, Nigeria imports a huge portion of wheat. I mean, Nigeria produces around 55,000 tons of wheat annually on average, and demand is estimated, according to the USDA, somewhere around 4.9 to 5 million metric tons. So there's a huge import component, and many of these flour milling companies in Nigeria, they do not get all of their FX requirements at the I&E window. So most of it, a good portion of it, also comes from the parallel market. So with higher wheat prices in the global markets, and I think this is likely to persist at least for the near term, and higher import costs, I think this is also going to translate into the end product of wheat, talking about flour, talking about noodles, pasta, bread, pastries, I think the prices of all those end products are also going to trend higher. We are seeing it already. The price of wheat in domestic commodities market is already up. I think of flour, I beg your pardon, is up, I think 3% to 15,000 naira per 50 kg bag.
Similarly, the end of the harmattan season in the southwest and southeast regions and the commencement of the rainy season is expected to boost Nigeria's 2020-2021 cocoa mid-crop harvest. How will this development affect global cocoa prices and Nigeria's export revenues, given that cocoa is one of Nigeria's largest agricultural exports?
So what harmattan really does to this cocoa pods is that it dries out the cocoa pods and also reduces the moisture content of the soil. And this simply leads to unusually small cocoa pods during the harvest, and also they're usually lightweight. So with the end of the harmattan season and the commencement of the rains, I think it would help, the mid-crop harvest, which is around April to June. It would increase Nigeria's production. And it's important to note that, there are 4 countries in West Africa that contributes around 70% of total cocoa production, which is their Ivory Coast, Ghana, Nigeria, and Cameroon. So obviously, if production increases in any of these countries, it has an inverse effect on global cocoa prices. So with Nigeria's production estimated to reach, I think, 270,000 tons this 2020-2021 marketing year, I think it should have a small effect on prices, a negative, it will dampen cocoa prices. But I think that Nigeria's cocoa revenue are more sensitive to production rather than price. So I think that the increase in production would counteract or would outweigh the reduction in cocoa prices globally, and I think it would increase export revenue from cocoa. However, as I always say, cocoa, even though it's one of Nigeria's largest agricultural exports, as a ratio of the total exports, it's quite small. It constitutes only about 1 or 2% of Nigeria's total exports.
All right. What is your outlook for the Naira exchange rates, given the lull in activity at the investors and exporters window, the accretion in external reserves, and reopening of the UK economy?
So the exchange rates outlook will be driven by a couple of factors. One is higher oil prices, right? So the higher oil prices and production, I think about 1.6 or 1.7 million barrels per day, will mean higher accretion to the external reserves. Like I mentioned before, external reserves are currently up $35 billion and with import cover of about 9 months. So higher accretion to external reserves also means more ammunition for the central bank to defend the Naira if need be. On the other hand, we are seeing a huge backlog of demand, about $2 billion. That's what the IMF estimated at the Article 4 consultation in February. And we are seeing a lull in activity because of foreign investors are actually very, very cautious because of the policy ambiguity, and because of also the backlog. Now, with the reopening of the UK economy, Nigeria has a very close relationship with the UK, both trade relationship and historical relationship because of colonial ties. We expect an increase in FX demand also because of we are nearing the summer season, so there'll be a lot of demand for there'll be a lot of demand for travel and things like that. So we expect some more demand to come online for FX, and overall, I think at the I&E markets, we expect the exchange rate to trade between, I think, 410 to 412 naira to the dollar, especially because that market is quite controlled. On the parallel market, we expect the pressure on the exchange rate to lead the naira to trade between 486 naira to the dollar to 488 naira to the dollar in the near term.
All right, thank you very much, Desola. We do appreciate your time there. Enjoy the rest of the day.
Thank you for having me.
We'll take a moment. We'll be back. Well, it's time for our opening calls to the market with Eddie Jong Ewa. Hello, Eddie. Good morning. Good morning.
Hi, Chimi. Good morning. Well, the market began with a sour note as the all-share index declined 0.40% to 38,712.55 points, while the market cap was lower by about the same percentage at 20.260 trillion naira. Now, volume, value, and deals traded yesterday were much higher compared to what we saw on Friday. But before we talk more about the market, let's just talk to Charles Fakuga, the Chief Operating Officer at Super Commercial Trust. Good morning, Mr. Fakuga. Thank you for joining us on the program.
Yeah, good morning for having me.
Well, I mean, the market has started on a sour note, on a negative note. Do you think that this will set the trend for the rest of the week?
Yes, if you look at what happened yesterday, there was this little migration traders had to do to migrate to a new trading platform, and some of them had some issues. However, what we saw in the market yesterday is just a reflection of what is going to happen throughout this week. But traders are optimistic cautiously because all the conditions are turning towards negative. Look at the macroeconomic environment is not improving. Look at the security situation is not improving. And the earnings report, earnings season is nearly over, though we're expecting from first quarter. So we can see that everything tends towards negative. But, however, investors and traders should be very cautious in terms of what they are trading, especially for investors. They should do their little homework and know where to invest in terms of meeting their investment objective. A market must go up and come down. It is for you as an investor to know when to enter and when to come out.
Well, all right, Mr. Fakuga, I hope everyone is listening to trade cautiously. Do enjoy the rest of your day. Charles Fakuga is the Chief Operating Officer at Super Commercial Trust. We'll just look through the market some more. All the sectors, well, most of the sectors were negative apart from the banking sector. Now, we saw gains from Zenith Bank, from FBN Holdings, from Access Bank. We saw some gains from the banking sector, although that was hampered by the huge decline we saw on Stanbic Bank. Consumer goods was down 1.03%. Now, there were huge losses from the brewers, international breweries, Nigerian breweries, and Guinness. All those stocks declined, and then that also dragged the index down by 1.03%. Industrial goods was unchanged. Insurance and oil and gas also declined. The unlisted securities market has continued with this bull run as the markets began the week positive by 0.42% at 758.99 points, while the market cap was at 539.59 billion naira. We saw about 1.15 million units worth 25 million naira traded in 6 deals. Now, the bond market began the week on a bullish note as we saw yields in that space rise by about 5 basis points. Now, we saw yields at the short end of the curve decline, but then yields at the mid and the long end were higher. There were 23 deals worth 12.46 billion naira in that counter. We didn't see any transactions at the Nigerian Treasury bills market. The OMO market was also bullish. We saw yields rise in that space. There were 14 deals worth 89.42 billion naira. But then there's some OMO maturities coming in, so we'll see how that would influence sentiment in the market, Chimi.
Absolutely, and of course, there's an auction coming up tomorrow. In any case, I will take the advice that Charles has given. Leap before, or rather, look before you leave. That's the advice I will take going into the equities market. All right, thanks, Eddie. We'll take another quick break, and when we come back, we do an opening call to London. Just stay with us. Well, the UK waking up with growth numbers this morning. Let's get a sense of that with Juliana. Good morning, Juliana. The GDP numbers out this morning shows the UK economy returned to modest growth in February, but remains sharply below its pre-pandemic peak amid the third COVID-19 lockdown. Now, this is despite the lockdown. What sectors were the winners?
Good morning, Jimmy. Well, the winning sector has got to be construction, which grew 0.6% in the month of February. This has been boosted by strong housing market, which has actually been going strong now for almost a year. It was one of the first sectors to be given the green light to open by Boris Johnson back in May. But as you said, this is modest growth, but still pretty decent, 0.4% after a 2.2% contraction in the month of January, according to a survey conducted by Reuters with economists. They expected somewhere between a 0.5% and a 0.6% growth. But considering there's been no changes between the months of January and February in lockdown restrictions, this is pretty decent. Services came in pretty poorly at 0.2%. But again, no surprises that consumer-facing industries have been struggling as February, the entirety of England was in a lockdown.
Meantime, data shows trade between the UK and EU partially recovered in February after a steep drop in January following Brexit. Does that mean the initial Brexit bottleneck has been taken care of?
Slightly, yes. I think the exports and imports between Britain and the bloc still remain pretty volatile. And even with this latest data from the ONS showing there has been a sharp improvement between trade, it's still 15% lower than what we experienced in December. But as you said, the second month has shown a sharp increase. I believe exports between Britain and the EU are up to £3.7 billion in February. This follows a £5.7 billion drop in January. There is still a long way to go, but I believe that, yes, the bottleneck is indeed coming to an end. And of course, we've got to take into consideration that there have been so many COVID-19 restrictions also.
And looking across the Atlantic, U.S. inflation trajectory is also on the radar for investors. Now, Federal Reserve Chair Jerome Powell had played down on concerns about rising inflation. How are investors in the UK viewing this?
Yeah, interesting. There seems to be more anxiety in Europe. None of the business rags within the square mile have covered this story. But of course, we know that inflation is always going to cause some sort of anxiety for the markets, particularly considering it has been a pretty volatile 12 months. I believe at 12:30 GMT, when this CPI data is released in the US, they're expecting to show that inflation has risen to 0.5% in March, followed by 0.4% growth in the month of February, which is pretty okay. I think investors have started to price in the fact that inflation will begin to rise as people start spending again. All that pent-up demand is finally being unleashed, but we'll see how comfortable they are with that data if it is below what the markets are forecasting at 0.5%, Chimmy.
Back at lunchtime to see how the markets are reacting to these numbers. Thank you. Okay, let's look at the crypto market with Laddie Williams. Well, Laddie, Bitcoin still ranging, but then what altcoin should we be looking at?
Well, Bitcoin right now looking bullish at this hour. So the altcoins, you might want to be, careful because, when Bitcoin is moving in a bullish way upward or downward, the altcoins actually suffer. Look at the market cap, $2.11 trillion, up by 1.26%. 24-hour volume, $152.51 billion, up 10%. That's the total crypto market. Bitcoin dominance still at 54.25% as at 8 a.m. This morning. Price of Bitcoin, $60,759. As at this hour, it's about $62,000. 24-hour volume, $54.234 billion. Price of Ethereum, $2,170, up by 1.34%. 24-hour volume, $22.326 billion traded this morning of Ethereum. Top alt by market cap, BNB having a pullback there. BNB has had a massive run all the way from about $200 to about $551 right now. ADA down about 2.81%. XRP up about 16% this morning from that previous pullback. Let's talk to Adebayo Juwon now, markets analyst. Hello, Adebayo. Great to have you.
Hi, Ladi. Morning.
Good morning. Good morning. So I noticed yesterday a couple of exchanges launching tokenized stocks. How does that work?
So it's been around for a while now. I think last year when FTX started tokenized stocks that give access to crypto traders for them to be able to trade the stock market. So this is the situation whereby the traders can use their BTC, their Ethereum, their BNB as collateral to have access to buy Tesla, Facebook stocks, and mostly the US stock market. So it's actually gaining popularity recently that Binance listed it, but it's been around for a while.
Okay, so do you really have equity in a Tesla stock if you actually buy these tokenized stocks?
Okay, yeah, like I mentioned, FTX is has a more advanced market on this, where you can redeem your tokenized stock to an actual real stock, on FTX. So FTX is partnered with some platforms that can allow you to redeem your Alibaba stock, from tokenized stock to your real stock.
Okay, so how do you expect this will, affect, other cryptocurrencies? Do you think traders will move from, regular cryptos to tokenized stocks?
Well, it does not really affect each other. I mean, the people who have interest in the stock market will just have easy access to it. The crypto market is a growing space which it has its own traders. So it just, tokenized stocks that give people more access to more markets. So I don't think it does affect each other.
Okay. All right. What's your outlook for price of Bitcoin this week?
Yeah, for a couple of hours, the market has been looking quite good. But I really don't want to give financial advice at this moment. But I would say traders should be quite careful at this point because the bull market has been on for a while, and we may get the supply turn in a moment from now.
Because some traders believe that the bull market is just starting, but you believe it's been on for a while, right?
Yeah. I mean, for 9 months now, being in an option market, so it's normal to have doubts of what could come next.
Well, let's not let greed have the better of us. All right, Adebayo, thank you so much for your time.
Yeah, my pleasure.
All right, so top gainers, BTC ST up about 40%, STX up 17%, XRP up 16%. Jimmy, it's not looking so bad this morning.
But caution. That's what your guest has just advised. And in the meantime, while we try to be cautious, what altcoins should we be bullish on given this launch of tokenized stock or whatever you call it?
Well, with the tokenized stocks, it's moving into mainstream, stocks. So right now, you should be looking at platforms that are actually, hosting such arrangements. So BNB is actually doing very well, and it's a token that we really need to watch.
We'll try and watch while also being cautious. In any case, we're not giving any financial advice here. All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu.